Let's bring on board the management of Tech Wabag. Skandaprasad Seetharaman is joining us from the company. Hi, good morning, sir. Thanks so much for joining us on the show. Let's first talk about how Q3 has been for you. It's been a good set of numbers coming for you this quarter. You have said that revenues will grow at a CAGR of 15 to 20% in the next 3 to 5 years. Could you throw some light on how you plan to achieve this growth rate, given that revenues have largely been flat or muted over the course of the last 3 years?
Yeah, good morning to you. Good morning to all your viewers. Thank you for the opportunity to be on your show. So I think this quarter has been a continuation of our profitable growth journey. You would have noticed that we have always kept this on top, that we have to grow our profitability much better than the growth of sales. And that's what we have been demonstrating. And even in this 9 months, you would see that our bottom line has grown faster than our top line. Number two, merely delivering a profitable growth is not enough. We also have to deliver on cash. And this is our 8th consecutive quarter of remaining net cash positive. Number three, we're also happy that this quarter brought us many new large orders, especially the order that we announced yesterday from the Kingdom of Saudi Arabia, where we are building an advanced wastewater treatment plant, where the principal off-taker will be SWPC. And this is one of the largest orders in the history of Wabag and a very key reference in the region. And to top it all, I think this quarter was also a quarter where we received an important external validation. Our long-term credit rating was upgraded to AA minus stable, which is a testament to the fact of the strategies that we have been adopting over the last 3-4 years are paying off and it is also getting recognized. Now, we have a good base which we have done. We have done a rejig of the business, our strategy over the last 3-4 years, and we have been going on this path. And even going forward, we see that with the strong order pipeline, especially in the Middle East and the African region, India also will start to come back now post-elections and the budget. And also rest of the emerging markets where we are showing tractions. We are confident of improving our order book much more, which will ensure that both our top line grows, but most importantly, our bottom line will grow faster than that, and our cash will remain positive throughout. We have given a medium-term outlook in the last year for a 3 to 5 year period, where a 15 to 20% top line growth with a 13 to 15% range of EBITDA is what we committed to the market. Till now, we have been able to maintain that, and you will see that the growth will continue to spur over the next 3 to 5 years going forward.
Right. A very good morning to you, Mr. Seetharaman. This is Cheryl also joining in the conversation. And you did speak about your order flows. You did speak about Middle East and how you're seeing orders inflow from there as well. And how can I not ask you about the sizable order win that you all actually reported to the exchanges yesterday? That is about 3,251 crore rupees consortium order that you all have got for a sewage treatment plant in Riyadh. I wanted to understand, what does this order actually mean for you when you talk about the growth, the revenue contribution for the company?
See, Cheryl, this is a 3,250 crore order for the consortium. This is an EPC consortium where Wabag is going to be the leader, and we are having MGC as our civil partner. We will build the sewage treatment plant on advanced technology, and the civil partner MGC will do the transmission line and the reservoir, which is more the civil heavy part. So we will remain the technology partner and the leader, while they will remain the consortium member and the civil partner for this project. From a revenue perspective, this order will give about 1,700 crores to Wabag out of the total consortium order. This will pan out over the next 2.5 to 3 years. We have already started working on the project because this is a project where we were confident of getting to this stage. So already the engineering has started. We've also started sending out inquiries. So what we call as a hot project internally, where we commit resources and start working on it when we are confident of the order consummating, that has already started. So we have an early advantage on this project. From a region perspective, we have done large sewage treatment plants like the one in Marafiq in Saudi Arabia, which we built, which we completed about 2-3 years back. Jeddah sewage treatment plant, which we completed recently. And now this is another marquee order in the region. We have done more than 30 large, complex marquee projects in the region, and we have a presence of over 4 decades in the region. So this will be another jewel in the crown, which will reinforce our leadership both in the water and wastewater market, as well as in the Middle East region and the Kingdom of Saudi Arabia.
Okay, Mr. Seetharaman, while you've spoken about the prominence of your presence in the Middle East region, tell us, going ahead, are you going to be focusing more in terms of more geographical diversification going ahead? Are you going to be foraying into new territories, or is the focus going to be on the Middle East region in the near future?
See, as a strategy, we wanted to remain always in the emerging markets. So we are a leader in India. We have a presence of over 4 decades in the Middle East and African region. We are also present in the Southeast Asian region and the CIS countries. Now, this is for us the emerging market block. And here, the need for water infrastructure is there. Our ability to be a full-scale water provider, right from engineering to O&M, is available. Our capabilities, our aspirations, and the need of this region perfectly matches. So this will be the region within which we'll play. And within these countries, the Middle East and Africa obviously is, because of the sizes, because of the need, and because of the value of water, is going to be a significantly larger market than any other market. And especially even within the Middle East, the Saudi Arabian region is going to be a significantly large one. And we have deployed a lot of resources into this region over the last 1.5 years, especially noticing that India will also go through a little bit of a slowdown due to the general elections. And it started paying off both in Middle East and Africa. You would see that in the last quarter, we have booked a 700 crore order in Zambia. Earlier we booked an order in Tunisia. We have booked an order early on in the year at Ras Tanura, which is in Saudi Arabia. We have got this order now, which is a $371 million order. So Middle East and Africa will be a very, very key growth driver, but the emerging markets, which I mentioned, will be our area of play.
Mr. Seetharaman, point taken, but just help us understand once again, if we come back to your numbers, while the order wins are looking healthy right now, the pipeline is looking robust going ahead as well. Just once again coming back to your numbers in terms of margins, what is going to lead to the expansion to 15% from the current sub 12% levels? By when can we expect some margin expansion to be seen?
See, I think for this 9 months, you have seen we have delivered about 13.5%. which is in the window of the 13 to 15 that we had committed to the market. We had set out certain parameters. Number one, higher O&M share in the revenues, which we want to build over the next 3 to 5 years. Second, working more on larger projects, advanced technology projects, which will build the book and also increase the volume. And number 3, specifically in terms of export markets. So we wanted to be more an international organization versus remaining an Indian organization. This is already being demonstrated over the last 3-4 years, where more than 40-45% of our revenues come from outside India. And this is only going to grow as we move forward. So these are the pillars which will drive both the top line as well as consequently the margins towards 14 and 15% as we move forward. But from a market perspective, that is why we gave a window of 13 to 15, because it will be progressive. Second, it also depends on the mix of projects. We are not a quarter-over-quarter company. We are a project company, and hence you will have to see us over a period of 3 to 5 years, which will give you a better quality understanding on the margins rather than just every quarter where the project mix will move. I may have a quarter where I would have even 14.5% margin. I'd have a quarter where I'll have 13% margins, but the volumes will compensate for that. So the mix of projects determines quarterly margins, but the way we would like to look at is the long game. Look at us at a 3 to 5 year period, because that is effective project cycle over which margins will develop, and we are confident margins will keep growing as we move forward.
Sounds optimistic. Sounds good, Mr. Seetharaman. Thank you for joining us on the show. On that note, we'll let you go.